Welcome to the ultimate showdown, Bitcoin versus gold. For centuries, gold has been the go-to asset for preserving wealth, but in recent years, Bitcoin has emerged as a digital contender. Today, we'll explore the similarities and differences between these two assets, helping you understand which might suit your goals best. Whether you're looking to protect your savings or seeking new opportunities, this debate is more relevant than ever. Let's dive into the world of hard money and digital innovation and see what each has to offer. Both Bitcoin and gold are often referred to as hard money. But what does that mean? Hard money is an asset that is difficult to create or replicate, making it rare and valuable. Gold has been mined for thousands of years and its supply grows slowly. Bitcoin, on the other hand, is limited by its code, only 21 million will ever exist. This rarity is a key reason why both are seen as stores of value, especially in times of economic uncertainty. Start with what unites Bitcoin and gold. Rarity. Gold's supply is limited by nature and mining new gold becomes harder over time. Bitcoin's rarity is enforced by its blockchain code, ensuring that no more than 21 million coins will ever exist. This scarcity is what gives both assets their appeal as a hedge against inflation and currency devaluation. Investors often turn to these assets when they want something that can't be easily printed or created. One of the main reasons people invest in gold or Bitcoin is to protect themselves from inflation. When central banks print more money, the value of cash can decrease. Gold has long been a safe haven during such times, maintaining its value even when currencies falter. Bitcoin, with its fixed supply, offers a similar promise. Many see it as digital gold, designed to hold its value as the world's economies shift and change. Now let's talk about what sets these two apart. Gold is tangible, you can hold it, see it, and store it in a safe. Its physical presence makes it easy to understand and trust for many people. Bitcoin, in contrast, exists only in the digital world. It's a string of code on the blockchain, accessible with a password but invisible to the naked eye. This difference shapes how people interact with and perceive each asset. Gold's appeal lies in its simplicity. It's been used as money and jewelry for thousands of years. Almost everyone understands what gold is and why it's valuable. It's legal, widely accepted, and easy to verify. You can buy gold coins or bars, store them at home or in a bank, and even pass them down to future generations. For many, gold's physical nature makes it a trustworthy choice. Bitcoin, on the other hand, is entirely digital. It operates on a blockchain, a decentralized network of computers that keeps track of every transaction. There's no physical coin to hold, but you can send Bitcoin anywhere in the world in minutes. This makes it incredibly flexible and borderless, but also means you need technology and internet access to use it. For some, this is exciting. For others, it's a barrier. Gold is recognized by governments and banks worldwide. It's a legal asset and you can buy, sell, or trade it almost anywhere. Bitcoin's legal status, however, varies from country to country. Some places embrace it, while others restrict or ban its use. This difference in recognition can affect how easy it is to use or invest in each asset depending on where you live. When it comes to using these assets, gold is straightforward. You can buy it at a store, keep it at home, or store it in a bank vault. Bitcoin requires a digital wallet and some technical know-how. Sending Bitcoin is fast and can cross borders easily, but it also comes with risks like hacking or losing your password. Each asset has its own learning curve and set of challenges. If you're looking for stability, gold has a reputation for being slow but steady. Its price doesn't swing wildly, making it attractive for those who want to preserve wealth over time. Bitcoin, on the other hand, is known for its dramatic price changes. This volatility can be risky, but it also creates opportunities for big gains. Your choice depends on whether you value stability or are willing to take on more risk for potential rewards. Gold's slow and steady growth has made it a favorite for conservative investors. It doesn't promise huge profits overnight, but it rarely loses value quickly. Over centuries, gold has weathered wars, recessions, and market crashes, always maintaining its status as a safe haven. If your goal is to protect your wealth, gold's track record is hard to beat. Bitcoin's price can rise or fall dramatically in a short time. For those willing to take risks, this volatility can mean big profits. Over the past decade, Bitcoin has outperformed many traditional assets, attracting investors who want to grow their wealth quickly. However, this comes with the risk of sudden losses. Bitcoin is often seen as a tool for those who are comfortable with uncertainty and looking for high returns. Looking at the long term, gold has a proven record. It's been a store of value for thousands of years, surviving countless economic cycles. Bitcoin, while much newer, has shown impressive growth since its creation in 2009. Some believe it could become even more valuable as digital technology advances. However, its future is less certain, and it depends on continued adoption and technological progress. Gold's ability to endure through centuries is unmatched. It has survived wars, economic crises, and changing governments. Its value is recognized everywhere, and it's unlikely to disappear anytime soon. This makes gold a reliable choice for those who want to pass wealth down to future generations, knowing it will still be valuable decades from now. Bitcoin is still in its early stages compared to gold. Its technology is evolving, and new uses are being discovered all the time. Some experts believe Bitcoin could revolutionize finance, making transactions faster and more secure. However, it also faces challenges, such as regulatory uncertainty and the need for widespread internet access. Its long-term success will depend on how these issues are addressed. Gold is universally accepted. Every country and bank recognizes its value, making it easy to buy, sell, or trade almost anywhere. Bitcoin is gaining acceptance, but it's not yet recognized everywhere. Some countries are embracing it, while others are cautious or even hostile. This difference can affect how easily you can use or invest in each asset depending on where you are in the world. Gold has been traded for thousands of years, making it the oldest and most established market. Its price is set by global supply and demand, and it's used by central banks as a reserve asset. This long history gives gold a level of trust and stability that few other assets can match. For many, gold's legacy is a key reason to invest. Bitcoin is the new kid on the block. It was created in 2009 and has grown rapidly, attracting attention from investors, companies, and even governments. While it doesn't have gold's long history, its rapid rise shows how quickly technology can change the financial landscape. Bitcoin's journey is just beginning, and its future remains full of possibilities. Different generations have different attitudes toward gold and Bitcoin. Older generations tend to trust gold, seeing it as a safe and familiar asset. Younger people, especially millennials and Gen Z, are more open to Bitcoin and digital assets. This generational divide shapes how each asset is viewed and adopted, and it could influence their future roles in the economy. For many families, gold is more than just an investment, it's a tradition. Passed down from grandparents to grandchildren, gold represents stability and continuity. Its physical form makes it easy to gift and inherit, creating a sense of lasting value. This tradition helps explain why gold remains so popular, even as new investment options emerge. Bitcoin appeals strongly to the digital generation. Millennials and Gen Z are comfortable with technology and see digital assets as the future. They value Bitcoin's potential for growth and its ability to move money quickly and globally. While older generations may be cautious, younger investors are driving Bitcoin's adoption and shaping its future. The heart of the debate is a simple question: do you value safety or opportunity more? Gold is the classic choice for those who want to protect their wealth and avoid risk. Bitcoin, on the other hand, offers the chance for high returns but with greater uncertainty. Your personal goals and risk tolerance will determine which asset is right for you. Gold's reputation as a safe haven is well earned. During times of crisis, investors flock to gold to protect their wealth. Its value tends to rise when other assets fall, making it a reliable anchor in any portfolio. If you're looking for peace of mind, gold's stability is hard to match. Bitcoin is not for the faint of heart. Its price can swing wildly, creating both risk and opportunity. For those who can handle the ups and downs, Bitcoin offers the potential for significant gains. It's a favorite among investors who are willing to take chances and believe in the future of digital finance. Gold can be bought and sold almost anywhere, making it accessible to people in every country. Bitcoin's accessibility depends on internet access and local regulations. In some places, it's easy to buy and use Bitcoin, in others, it's restricted or even banned. This difference can influence which asset is more practical for you. No matter where you go, gold is valuable. Its price is set by international markets and it's accepted by banks and jewelers worldwide. This universal value makes gold a reliable choice for anyone who wants an asset that's always in demand. Bitcoin's reach is expanding rapidly. More businesses and individuals are accepting it, and some countries are even exploring it as legal tender. However, it's not yet as universally accepted as gold. As technology spreads and regulations evolve, Bitcoin's accessibility is likely to improve, opening new opportunities for investors. Security is a key concern for any investment. Gold can be stolen if not stored securely, but it's not vulnerable to cyberattacks. Bitcoin, while safe from physical theft, can be lost if you forget your password or fall victim to hacking. Each asset requires different security measures, and it's important to understand the risks before investing. To keep gold safe, many people use bank vaults or home safes. Insurance can protect against theft or loss, but there are costs involved. The physical nature of gold means you need to think about where and how to store it securely, especially if you have a large amount. Bitcoin security is all about protecting your digital wallet. Strong passwords, two-factor authentication, and secure backups are essential. If you lose access to your wallet, your Bitcoin could be gone forever. While there's no risk of physical theft, cyber threats are a real concern, so staying vigilant is key. Both gold and Bitcoin are highly liquid assets, meaning they can be bought or sold quickly. Gold is traded on global markets and you can sell it at banks or jewelry stores. Bitcoin can be traded 24/7 on online exchanges, making it even more accessible for some investors. Liquidity is an important factor if you need to access your money quickly. Gold is traded on major exchanges around the world and its price is set by global supply and demand. You can buy gold through banks, brokers, or even online platforms. Its established market makes it easy to find buyers and sellers, ensuring you can always trade when needed. Unlike traditional markets, Bitcoin trades around the clock. You can buy or sell Bitcoin at any time from anywhere with an internet connection. This constant availability is a big advantage for investors who want flexibility and quick access to their funds. Trust is essential in any investment. Gold's value is transparent, set by international markets and verified by weight and purity. Bitcoin's blockchain provides a public record of every transaction, offering transparency in a different way. Both assets have systems in place to build trust, but they operate very differently. Gold's track record is unmatched. It has maintained its value for thousands of years, surviving every kind of economic upheaval. This history gives investors confidence that gold will continue to be a reliable store of value in the future. Bitcoin's blockchain is a public ledger that records every transaction. Anyone can verify the movement of coins, making the system transparent and secure. This technology is one of the reasons Bitcoin is trusted by its users, even though it's a digital asset. Both gold and Bitcoin have environmental impacts. Gold mining can damage ecosystems and requires significant energy. Bitcoin mining also uses a lot of electricity, raising concerns about its carbon footprint. Investors are increasingly considering these factors when choosing where to put their money. Gold mining can lead to deforestation, water pollution, and habitat destruction. While efforts are being made to reduce its impact, gold's extraction process remains a concern for environmentally conscious investors. Responsible sourcing and recycling are becoming more important in the gold industry. Bitcoin mining relies on powerful computers that use a lot of electricity. This has sparked debates about its environmental impact, especially in regions where energy comes from fossil fuels. Some miners are turning to renewable energy, but the issue remains a hot topic in the crypto world. Regulation plays a big role in how easy it is to invest in gold or Bitcoin. Gold is well regulated and accepted everywhere. Bitcoin's legal status is still evolving, with some countries welcoming it and others imposing restrictions. Staying informed about regulations is crucial for anyone considering these assets. Gold's legal status is clear and stable. It's recognized as a valuable asset by governments and financial institutions worldwide. This regulatory clarity makes it easy to buy, sell, and store gold without worrying about sudden changes in the law. Bitcoin's regulatory environment is still developing. Some countries are creating laws to support its use, while others are imposing bans or restrictions. This uncertainty can make investing in Bitcoin riskier, but it also means there's potential for positive changes as governments adapt to new technology. Ultimately, the choice between Bitcoin and gold depends on your personal goals and risk tolerance. If you value stability and tradition, gold may be the better fit. If you're excited by innovation and willing to take risks, Bitcoin could offer greater rewards. Both assets have their strengths and weaknesses, and understanding them is key to making an informed decision. Many investors choose to diversify by holding both gold and Bitcoin. This approach balances the stability of gold with the growth potential of Bitcoin. By spreading your investments, you can reduce risk and take advantage of the unique benefits each asset offers. Diversification is a smart strategy for building long-term wealth. In the end, there's no one-size-fits-all answer to the Bitcoin versus gold debate. Both have their place in the world of investing, and the best choice depends on your unique situation. Whether you choose gold for its safety or Bitcoin for its opportunity, understanding the pros and cons will help you make the right decision for your financial future.